A lot of people are sending me this news article at Financial Post and asking me to comment upon this because the author has painted a picture where he's kind of saying that if we follow the history in 2001, we will see big cuts from Bank of Canada coming end of this year or perhaps beginning of 2024. It is true that in 2001, Bank of Canada actually started cutting rates aggressively because we were at the same level as we are now, but then Bank of Canada started cutting rates and brought it down to like 3%. But there were some reasons behind it. The unemployment went up to like 7%, and the GDP started contracting in the light of 9/11 terror attacks, which has brought the entire world into a complete chaos. And then we saw two wars broke out in Afghanistan and Iraq, which has completely changed the overall geopolitical picture and brought a lot of uncertainty. So there were certain elements which kind of played in that scenario back in 2001, but the things are different right now. Back then, the debt level was not that high, okay? The house price, the average house price back then was somewhere between $250,000 and $300,000. Now it's over $1 million, a decent sized family house if you want to buy in GTA or in Vancouver. So the debt level is, I think, 10 times higher. Now you want to qualify for a house which is basically costing you 10 times more your annual income. So there's so many differences between 2001 and now. And whoever is wishing for a rate cuts, understand why would Bank of Canada will start cutting rates now. Unemployment is below 5%. The inflation is still high. One reading doesn't justify a rate cut. The GDP is still above zero. So why would they cut rates now? Even though these are all government figures, but we have to take it because that's what makes into the decision criteria. I don't agree with them to begin with, but that's what we have. Answers that question. Why would they do it? The only reason why they will start cutting rates is when they see the unemployment is going up like crazy, 7% or 8%, or the GDP start contracting quarter over quarter. If we will see a negative GDP number quarter over quarter, then it's an alarming situation. And even in that situation, we have people coming in from outside, 1.2 million people. They are bringing cash and wealth into this country, try to spend money. Despite of that spending power, if we still see negative GDP growth, then it's a nightmare situation to be in, which means people will start losing jobs. There will be job cuts. There will be businesses filing bankruptcies, insolvencies happening across the board. People will be getting default on their loans. That scenario is a nightmare scenario nobody would want to be in. Even in that scenario, if Bank of Canada cut rates to 3%, what benefit it will give to you if you cannot even qualify for a loan or a mortgage because you don't have a job? And even if you have a job, your risk profile is much higher and bank is not willing to lend you money. What benefit it will give you? And in that scenario, an average person will tend to take a back seat and think about, okay, the situation is so chaotic, maybe I should keep some money in my saving account to be ready for a rainy day. So whoever is wishing for this kind of rate cuts because the recession will kick in and everything will be rosy after that, they're living in fool's paradise, guys. So either your financial advisor who is wishing for this and telling you this is going to happen, he or she has no idea what's going to happen because nobody knows what's going to happen, and recession is not a good time to be in. Okay, for the elites, yes, it's the opportunity for them to make money, but for a common person, it is a nightmare situation to be in. Anyway, let me know what you think. Put your comments down below and subscribe and share, and I'll see you in my next video. Thank you.